Let's get right into it. The world of buying and selling businesses is going through a massive tech-driven shakeup. And look, if you're a business owner, a potential buyer, or even an advisor in this space, what's happening right now is set to fundamentally change your entire strategy for 2025 and well beyond. And this quote really hits the nail on the head. We're not talking about small tweaks here and there. No, these are fundamental shifts in how things are done, what clients expect, and even how we define a business's true value. The entire landscape is being redrawn, and frankly, the stakes for getting it right have never been higher. So first up, let's look at the 2025 brokerage landscape. It's a really fascinating picture, a real market of contrasts, mixing a bit of optimism with a healthy dose of caution, and it's throwing up some pretty unique opportunities. To give you a sense of the scale we're dealing with, the global business brokerage market is worth over £165 billion. Yeah, you heard that right. This is not a niche sector. It's a colossal industry with a huge amount of capital in play, which is exactly why all these transformations are making such big waves. Now, here's where we see the real push and pull in the market. On one hand, you've got small business owners feeling pretty optimistic. They're projecting higher sales, which is great news. But, and it's a big but, that optimism is getting slammed by the reality of high borrowing costs, stubborn inflation, and what everyone's saying is the number one problem: finding good people. These headwinds aren't just minor irritations. They directly affect a business's value and whether a deal can even get done. So what has all this economic pressure actually done to the market? Well, it's created something experts are calling the barbell market. What does that mean? It means instead of activity being spread evenly, we're seeing all the action bunched up at the two extremes, the very big and the very small, leaving the middle ground surprisingly quiet. And this chart just lays it out perfectly. Look at the top end. Businesses in that £5 to £50 million range, they're commanding really strong multiples, around 5.5 times earnings, mostly because institutional investors are hungry for them. But then look at the other end. The micro-business space, so anything under £500,000, has also seen multiples pushed up to a rare high of 2.3 times. That's being fueled by individual buyers looking for very specific niche businesses. Right, on to our second section, technology transforms the deal. Because bubbling under all these market dynamics is the unstoppable force of technology. And it's not just tweaking things, it's completely redefining the broker's job and the very nature of a deal itself. So here's the absolute key takeaway. The role of a broker is shifting away from just being a transactional middleman, someone who just connects a buyer and a seller. Now, it's about being a high-level strategic advisor. Because AI and sophisticated digital platforms are automating more and more of the admin, it frees up the broker to focus on what really matters: creating value. This comparison just spells it out, doesn't it? The traditional broker, they relied on their personal contacts, their little black book, and a lot of manual paperwork to push a deal through. The modern advisor, on the other hand, is tapping into global platforms, using AI-powered tools, and diving deep into data analysis to give strategic advice, often well before a business is even on the market. It's a whole different game. And these are the engines actually driving that change. We're talking about AI algorithms that give you real-time valuations that can shift with the market. We're talking about secure online marketplaces that can vet buyers from all over the world. There's advanced data analytics that can match a business to its perfect buyer with incredible accuracy. And, of course, automated compliance systems to handle all the tricky regulatory stuff. Okay, Section 3, Valuation in a New Era. With everything we've talked about, what is a business really worth today? Well, here's the crucial point. A simple profit multiple just doesn't cut it anymore. The market now demands cold, hard proof of operational excellence. Let me just ask you a direct question, and honestly, it's one that every single business owner should be asking themselves. What is the one factor that can most severely wreck your company's valuation when it comes time to sell? And the answer, according to all the data, is owner dependency. Simple as that. If your business can't run smoothly without you, a buyer sees massive risk, and that one single factor can slash your valuation by as much as 30%. Why? Because it screams a fragile operation and a nightmare transition. Now, on the flip side of that coin, what's the most powerful value driver? What can you do to really boost that number? It's strong, predictable free cash flow. A consistent, proven ability to generate cash after all the bills and investments are paid. Well, that's the ultimate sign of a healthy, well-oiled machine.
and it can boost a valuation by up to an incredible 45%.
This table lays out the new valuation formula perfectly. You can see it right there. Operational excellence translates directly into financial value. Things like being scalable, having well-documented processes, predictable revenue streams, they all add a significant premium. The big takeaway here, getting a business ready for sale isn't just about tidying up the accounts anymore. It's about professionalizing the entire operation from top to bottom. So that brings us to our final section, the modern broker imperative. Let's pull all of this together. In this new world, what should you really be demanding from your advisor?
While the service model itself has completely changed, it's expanded massively. A modern brokerage has to be a multidisciplinary advisor now. It all starts with pre-sale consulting to fix those operational weaknesses we just talked about. Then comes expert deal structuring to get around the tough credit market, followed by tech-enabled marketing to reach a global pool of buyers, and all of it has to be built on a foundation of rigorous compliance and ethics. And that expert deal structuring part, it's more critical than ever. With interest rates making it hard to get financing, you need creative solutions to bridge that gap between what a seller wants and what a buyer can pay. Structures like earnouts, as you can see defined here, are becoming much more common, but they have to be negotiated very carefully to protect the seller while still giving the buyer confidence. And underpinning everything, absolutely everything, are these non-negotiable pillars of trust. Fiduciary duty, putting the client's interests first, full transparency on every single fee, and absolute confidentiality. These aren't just nice-to-haves anymore. They are the essential foundations of any modern professional brokerage. Getting this wrong doesn't just put one deal at risk, it completely destroys your credibility. So the crucial takeaway for the entire industry really is that its future credibility hinges on this very shift. The market is moving, and it's moving decisively towards highly ethical, transparent models that put the client's success above everything else. The old way of doing business with murky fees and potential conflicts of interest is quite simply on its way out. And that leaves us with one final crucial thought. We've seen how technology, economics, and a new ethical standard are creating a totally new reality for business brokerage. The advisors have had to evolve. So the critical question you need to ask yourself is this: has your exit strategy evolved with them? Thanks for joining this explainer.